Hiring or even firing employees can't necessarily fix all of your cash flow problems. In fact, it can sometimes make it worse. Two metrics I would look at when it comes to your labor cost is just the good old-fashioned labor cost percentage, which is your total labor divided by your total sales or revenue, and that's going to give you a percentage. And then number two is revenue per employee, and that is exactly what it is your sales divided by the number of employees, and that's going to give you a metric based on this is how many sales we get per employee we have sitting in a seat in our company. Those are kind of start to give you an idea of where you're at with your labor cost. And again, I'm not going to even bother to say what's right, what's wrong, what's a good metric, what's not, because it is industry specific. So I would Google around based on your industry, based on the type of business you have, and figure out what are those, run those numbers and kind of see where you're at. That can kind of start to uncover some things as far as where you are with your payroll and your payroll cost. And I'm not saying if you're bad, go out and fire people. Don't do that necessarily. You could train people in other areas, start cross-training. Cross-training, hands down, was my biggest labor saver when I was managing businesses, because when you can cross-train, it makes everybody happier. Employees like the fact that they can learn other jobs. As an owner or a manager of a business, it makes scheduling so much easier because you can plug people in different places. People don't get bored. It makes scheduling better, and it overall helps your costs. And if you have hourly employees, it keeps those hourly employees at a higher level if they want hit those 40-hour a weeks schedule. So cross training was always in my back pocket as far as managing labor. It was the best little tool. It takes a little while to get there, but it is worth cross training your employees. All right, good luck.